Welcome into the Tool Shed Live. I'm Warren Seegers. It's 9 o'clock and it's Thursday, and we are streaming live on Facebook. With me tonight is Kym Baker, who is with Ruoff Mortgage. Now, Kym, I'm familiar with like conventional loans and VA loans, but one that I have never heard of, to be honest with you, is USDA loans.
Yeah, it's not very well known because in our area here in Elkhart, Indiana, there aren't very many areas that qualify, that are considered rural. So if you're from an urban area or a metropolitan area, it's not going to be something you would even consider or entertain.
So is one loan better than the other?
Yes and no. I mean, yeah, it'd be great to qualify for less fees or maybe lower interest rate, but it's all determined by someone's credit score, how much money they have to work with, the area that they're buying in. Sometimes there's certain loans that have income limitations, so it's really customizable to the particular client. So me as a home mortgage company, we offer all these programs and have the ability to figure out what serves this client best. What's the most affordable, the easiest to obtain so that they can qualify. So could one be better than the other? Well, if you don't qualify for it, it's not better. So exactly. So we just want to make sure we're fitting somebody into the very best program that they qualify for.
Okay, so that brings me to something that this is definitely not a conventional loan, but it's kind of like the buy here, pay here, car lots, but for homes, and that's the land contract.
Sure.
Sometimes people just cannot qualify for a loan and they go the land contract route. Is that a safe bet to do that?
Well, of course, that isn't something I offer because that is basically private money. So that's the seller offering you the mortgage, more or less, versus a bank or a mortgage company. What I can tell you, at least in the state of Indiana, it highly favors the seller. The seller is in the driver's seat and has all the rights. You actually give up, so it's kind of like renting, At least somebody feels like they're renting because they still have to answer to the owner. They don't have nearly as many rights as tenants' rights. And it's all spelled out, as far as in the document they sign. Usually folks that buy here, pay here, or have a land contract, they're paying higher interest rates because they cannot go and get money from a bank or a mortgage company. So, but if that gets them in a home and gets them feeling home ownership and they have all the terms and conditions worked out that they're comfortable with, it can be a way to get into a home, but I can tell you if they miss one day or one day late, that seller has the right to foreclose and take over, and you lose everything that you've paid into your home.
And I have also heard that if you have a land contract and the person that you're buying the home off of defaults, goes bankrupt, loses all their money, that you lose everything you have in it because it wasn't really technically yours.
Possibly. There are two different types of land contracts. One is where it's private and it's agreement between you and me, and kind of nobody else knows about it. And there's others that are recorded with the county, meaning you've taken your documentation down to the county and have them put a record that you have an interest in that property. So I think you're protecting yourself, and again, I'm not a lawyer, but I think you're giving yourselves more protections when you've let the county know I have an interest here. So if anybody tries to come along and take that property from that seller, they're going to know, hey, wait a minute, there's another party involved that needs to be, in this mix, and at least could give you notification or at least have you be a part of that remedy to not have you lose your home.
Okay. So now we've talked about the different types of loans that people can get for their home. What are things that people should have before they walk into your office to get a loan? Because I'm sure that happens all the time. They just don't know what they need. They sit down, they say they want a loan, and then you just start rattling off, do you have this, 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 and this?
Sure.
What can they do before they come to you to be more prepared to make the process quicker and easier going through?
Absolutely. So I would first say, come to me anyway, even if you don't think you're ready, because I may be able to give you a lot of good information that you think you need, but you really don't. So, but here's, I'll give you some general things that we're going to be looking for. We're going to be pulling your credit. So, anytime we're going to look at somebody giving you money, we have to see how you've handled money in the past. Have you paid people that you've borrowed money from? And that's a big part of the decision-making process and how well you've done that. I always let people know, though, even if you think, oh, I don't know how great my credit would be, coming to me and having me gather that information is the best place to start, because if you don't qualify today, I can tell you how you're going to be able to qualify in the future. And I don't like to see people trying to figure it out on their own, because sometimes people go out and pay things down or pay things off or do some things differently, and it doesn't improve anything, and they feel like I've worked so hard, and they're treading water, so it's always good to get advice from someone who can do a calculation, use different algorithms that can say, well, hey, if you do X, Y, and Z, your credit score can improve and get you to where you can purchase. So credit's number one. That's something that, again, that's something we're going to look at. It's not anything you need to bring with you. It's just something that's going to be investigated. The other thing is going to be you're going to need bank statements. So you're going to need to show you have saved some money. If you're in a program, which most programs out there do require some investment from the buyer. So the buyer is going to need to show, hey, I've got skin in this game. I've got money. I've saved. And here's how much I have. So we're going to need 2 months of bank statements as a general rule. And then if you are employed, you need to show pay stubs. So those are something recent. And then your last 2 years of history as far as income. So it could be W-2s. It could be your full tax returns if you're self-employed. If you're someone who gets money from some type of government entity, you need to show the award letter, basically how much you're getting on a regular basis from the government. So those are the kind of the basics that you need. Now, if you've had a divorce, if you've had a bankruptcy, if you're either receiving or paying child support, any of those types of orders are good to have handy as well.
So this is kind of, I'm not saying people should do this, but people sometimes make extra incomes that they don't report. Can they use that money that they're making, that they're not paying taxes on, that they're just getting kind of paid on the table? So, it looks like their income is this much in taxes, taxable income, but some of it's not. Can you take that and use that as part of their income?
No. If you're not going to document it and it's not provable, it never happened. So what mortgage lending is mostly about is being able to prove everything. 10 years ago, when we hit our mortgage crisis and the housing crisis, a lot of why we had that is because nobody was verifying anything. Nobody verified that people actually qualified or made enough money or any of that. So the government now has kind of put the smack down and said, we need to make sure we can verify these things, because we don't want to put people in homes they can't afford. We want to make sure it's documented.
So what's the difference between a mortgage company and just a regular bank?
Sure. So a mortgage company works with many different programs. So they're going to be able to look at conventional through Fannie Mae or Freddie Mac. These are the main sources of that money. And then FHA, VA, USD, all those different options. And so, again, we're going to look at your whole picture and fit you into the program that best suits your needs. A bank usually has a few items that they offer, a few types of loans, and they may have only a certain appetite for what type of client they're looking for. So they may we're only looking to take this type of risk, so we're only going to offer conventional loans, or we're only going to offer this and that. So it just depends. The banks usually have less choices than a mortgage lender. We're going to have more of a menu to choose from, and that's the main difference.
Is it easier to go through a mortgage company or easier to go through a bank? Which one would you have a better chance of being approved for a loan?
Because we have more choices in the home mortgage world, I would say obviously a home mortgage company, because what happens sometimes is people do go to their local bank, and if they get told no, because that bank doesn't have a program that fits their needs, they get discouraged. And they're like, I don't qualify. I'm not going to get a home. And they may very well qualify. That just may not be, that bank didn't offer that particular program. So I always say, please, that can really break somebody's spirit a little bit. So I like it when they, if they come to me, I'm going to search high and low to find, the very best program and all the options out there, so that they're not, throwing in the towel.
Right. So I have a few more questions for you. All right, here's a good one. So my wife kind of deals with this, but as a real estate agent, someone wants to sell their house for a certain price. I get it. They love their home. It's their baby. They've been fixing it up forever. And they think that the value, just on their own thoughts, it's worth this much. Then the appraiser comes in and says, no, it's worth this much. Comes under the asking price, the appraised value. Can you still get a loan for something that comes under what they're actually asking for?
Sure, that's a great question. So yeah, part of the home approval process is having the property appraised, meaning what you're paying for it, is it worth that? Okay,
Right.
so we're going to hire an appraiser. They're independent third party. They do not work for any mortgage company or bank.
Okay.
They're entirely independent. And they're going to come in and evaluate what homes are similar to that home that have sold recently.
Okay.
And that's how they evaluate. And they'll kind of go, well, but that home has this and this home, and they make adjustments and come up with a value.
Okay.
Whichever is the lesser of the two, either the purchase price or the appraised value, is how much we as lenders are going to base our loan amount on.
Okay.
So the quick answer is yes, you can get a loan if your home appraises less, but you have to make up that difference in cash. So do you really want to do that? Are you going to
Right.
want to pay above and beyond the appraisal value? Do you even have the funds to do it?
Gotcha.
So yes, there are opportunities for people to do that, but in reality, most people don't want to do that because they don't want to overpay for something. If you know
Exactly.
something's not worth what you're paying for it, you're unlikely to want to proceed. Okay. And a lot of times don't have the funds to do it. The times I do see where people pay, it's usually new construction, where they've built the home to their specifications.
Right.
And they added all the bells and whistles they wanted. Maybe they did a little, they really went a little wild, and so they paid, they're going to be willing to pay more because it's exactly what they want.
Exactly.
Yeah.
And the way I look at that is you're getting a loan for the basic house, but instead of taking years for all the add-ons, putting the pool and a deck, you just said, I'm going to do it now and not worry about it for the next 20 years.
Exactly.
That makes sense that way. But for a home that's already been lived in, the person thinks it's worth more, they're just going to get what it appraises for.
And it's an emotional decision for somebody to sell a home and buy a home. So that's where you're right. You have a seller that they're attached.
Right.
And there's memories there. But this is where the business part of the transaction comes in when it comes to the appraisal. So that's who's going to, determine its value. And again, they're independent. They don't work for the buyer. They don't work for the seller. They come in and just trying to, very, very much just look at the real value.
Okay. A question going back to land contracts. So it's basically like paying rent. Now, can you use, if you buy a home on land contract, can you use what you paid into that home as considered as a down payment?
Yep, you're gaining equity. Yeah.
Okay.
So generally there's a term on a land contract. Again, the seller and buyer can agree to whatever terms they want to. So they can set an interest rate, they can balloon the loan, they can pay it out over years and years. It just really depends on what, everybody's interested in. Usually a seller is interested in doing that short term. So maybe a few years they're willing to accept payments from someone, but at some point in time they want it to get to a point where somebody can go get their own financing and pay them off in full. So that's generally what happens. But yeah, as they're paying in, just like your mortgage, some of it's going to be going to principal and some of it's going to be going to interest. So there's only a portion of it that can be counted, but yeah, you're helping to hopefully improve, unless you're not taking care of the property and you're letting its value deteriorate.
So that would be another thing.
So you want to make sure you're maintaining it and increasing, at least, keeping it at its
at what you
condition.
bought it at. But it would be a good idea also to make improvements as you go.
Yeah, especially if you're in it, this is my home and I'm owning it, yeah.
Okay. So we have a question here. Hey, Michael, your question is, what about the new guy that just moved to the USA from a foreign country? What do I need to know if I want to purchase a home?
Okay, so there's going to be requirements to show citizenship and or your right to be in the country. Okay, because if somebody's going to give you money, going to give you money that you have to pay out for 30 years, we need to know you're going to be around here for 30 years, and you're allowed to be here. Well, you're allowed to be here, yeah. So because there's really no way for a mortgage company or lender to pursue somebody who leaves the United States for their money.
How often do you actually write loans for people that are here on, they're here legally but not a citizen? Is that a common thing, or?
Yes, there's a lot of resident aliens or people with green cards that,
Okay.
yeah, buy homes all the time. So they just have to show that they are legally here.
Okay.
And there are also those that are part of DACA, meaning they're here because they were brought here as children, and there's
Okay.
they have documentation that says I am still here legally. I'm working towards getting my alien resident card or my citizenship, whatever that may be.
Okay, let's see. There's a few more questions. I want to make sure I'm hitting on all of them. I think we covered a lot of them. This is great. So, what are some of if there were like 5 things that you could give a tip on people that are going in to get a home loan, what are 5 tips that you can get them either to prepare themselves or to be able to be approved for a loan? What are 5 things that there's 5 things only that you can do to secure a loan, what would they be?
Okay.
You could even do 3.
Okay. I'll try to
No
come
pressure.
up with 5 that are, there's so many things. The one thing I would say, come in with, what do I want to say, a willing spirit of working as a team.
Okay.
I want you to get the loan as much as you want to get your home. So there's going to be questions that come up during the underwriting process. There's going to be documentation that might be needed. That is what the whole lending process is about verifying everything you're telling us on your loan application.
Right.
So as those questions come up, you may need to provide some documentation that a lender's going to need. And all we're looking for is a reason to continue to say yes. So don't panic. Let's work together and try to get that document. So I would say be ready for those questions. That'd be the number one thing that I would say. Don't panic when questions arise. That's really normal.
I really like what you just said. You are trying to approve them just as much as they want to approve. So,
we want to say yes.
because I think a lot of people get the idea when they go to the bank, they're expecting no. And they expect that they're going underneath, 20 questions of why should I give you money, but the questions don't help them. But that's exactly the opposite what you're saying.
Absolutely. No, when somebody's asking questions, they're trying to find more reasons to say yes. And a lot of times what happens is these mortgage files, are scrutinized by the government. They can be audited at any time. And so we have to always show that we asked the question. If there was something that's out of the ordinary or just a little different or just needs an explanation, it needs to be documented. And a lot of what the government's trying to make sure is that we're treating everybody the same, that we're being fair.
Right.
So it's not that, again, you're bad, good, or anything. It's that everybody gets that same treatment. So because they want to see how, money is available to everybody.
Right. Okay.
So that's an important factor. And I would say, save your money, keep trying to squirrel it away because that's, I think, a big thing that people aren't always ready for. Even if you don't need to put it down towards the home, you're going to need it when you move in. And you're going to need something when you do a loan as what's called reserves, meaning money who still sits in the bank after it's all said and done and you didn't spend and give it to the seller when you made the purchase. That is, again, another protection out there that you didn't use every red cent that you had to get into a home so that now we don't think you're going to be able to move in or set up your utilities or eat that month. We need to make sure that you have something to fall back on. So that's something that I think sometimes people think, I saved every bit I needed to. You still need to have a little left over.
Right.
And again,
still
it's
have
not
to
money.
Pay the light bills, feed the kids, put shoes on.
Get the moving van, and absolutely. We don't want you eating ramen for a month. We want you to actually be able to live in the home.
Exactly.
So having some money left over is important. And I would say, don't be afraid to get started right away. If you're afraid of your credit, don't be. It's not if you've had issues in the past, it's not a death sentence. Credit changes all the time. I get a lot of response from people who know they've had great credit or do have great credit, and they sometimes get upset if their score's less than the last time they heard it.
Right.
It is fluid. It changes all the time. Every month when you pay your bills or you've charged more on your card or paid less on your card or paid down your loans, all of that information is updating in your credit file and is changing that score slightly. So don't be concerned that if you knew what it was 6 months ago that it's exactly the same as it was today, good or bad. That's just something we are constantly investigating, and we have ways of helping you improve it if need be. But again, if it's moved slightly downward, don't worry, it'll probably be a little bit different next month.
Now, when you check your credit score, at one time I think it was if the more that you checked it, it actually hurt your credit score. Is that true anymore?
You know, I think that's the one thing that the credit companies have really communicated to the general public of don't check your credit.
Right.
And I would say, to a certain degree, yes, you don't want to go out and apply for credit at 20 different places. That is going to hurt your score. Checking it here and there is not going to dramatically hurt your score. It's a very small fraction of what actually affects your credit score.
Okay.
Things like how long you've had credit, how well you're paying your bills, and the type of balances you keep in relation to the line, it weighs so much more heavily on your credit score than those checks here and there.
All right. So like if you use Credit Karma.
Yeah, and those are when you as a consumer are checking your credit versus asking me as a lender to check.
So that's the big difference.
It is different, yes, because you're allowed to look at your credit and
to
see
make
what's
sure that
going
it's
on.
good.
Absolutely, so make sure there's no fraud upon you or something misreporting. But yeah, if you're coming to me or getting a car loan or a credit card or whatever it is, it looks like you're seeking new credit, and that hits differently.
Gotcha. So let me ask you this: say I want to buy a property for an investment thing. Can you help me with that? I'm not going to live in it, but I'm going to buy it and I'm going to turn it into a vacation home for an investment.
Okay, so is somebody going to live there? Okay, so it's not like a commercial pole barn. You're saying it's somewhere.
It would be a home, like an Airbnb.
Okay,
I have people coming in, going out every week, 2 weeks, whatever.
Absolutely, that's okay. So not only can we do primary home, so the home you live in, but it can be your second home. So it could be your home in Florida versus the home in Indiana, or it can be an investment property. And the rules are just going to be a little bit different.
Okay.
But yes, absolutely, we do investment property, and we're going to look at things a little more carefully because we know that those are easier things to walk away from if everything went south. Okay.
Right.
You're usually going to protect the home that you dwell in versus something else. So usually requires a higher down payment. Usually the rate is going to be higher.
Okay.
Not astronomically higher, but it's going to be higher. Again, those things are all about risk. And a lender is always looking at how risky is this deal, and they're going to price it accordingly. So they're either going to ask for more of an investment from you as a down payment and higher interest rate, just in case they have a loss. They're going to try to make that difference.
So here's my curveball question.
Okay.
Because we dealt with this. We talked to you. So here we have the big Edifice Venture project, this huge house, over 7,000 square feet of livable space, but we're not able to get a conventional loan because of the craziest thing. Do you remember what that is?
No, to remind me.
Closets.
Ah, yes.
So what are the things that when you're looking at a house, what would be like, I'd really love to help you, but you need to have these things in the house in order for us to give you a loan?
Sure, and I will say, disclaimer, I'm not a licensed real estate appraiser. So homes have to appraise, and they have to be compared to other homes similar to yours. So the numbers of bedrooms and bathrooms is very important. And what is considered a bedroom by real estate appraisers has a closet.
It has a closet, not a wardrobe closet where you went to whatever.
Bought a piece of furniture and put it,
and put some hangers on it. Which I just thought was the most bizarre thing, but I get it. I totally understand it.
And really, a lender too is looking at the appraisal into if it all went south, could we resell this? If we had to foreclose and come get our collateral, can we sell it? And that makes something less, I would say less likely, harder to sell. Okay, or it might need work, someone to come in and add those things. Banks are not interested in spending money on contractors to add things. They just want to get rid of it. They want their money. If you lend somebody money, you don't want them to hand you something else instead of paying your money back. You would much rather have the cash, and that's what a bank's looking at. And they want to be able to move it quickly if that's the case.
So kind of keeping on that theme, I have a house. I've made an offer on it. The appraiser comes in, and he says, the basement has a mold problem. Can I still get that financed?
It's going to need to be remedied. Okay. So if there's an issue that comes up that is noted on an appraisal, And it depends on the type of appraisal. Anytime you're adding the government into your loan, they're going to make sure that the safety is important. So they're going to be looking at handrails, mold issues, lead-based paint problems. So something that might be a health hazard, they're going to be a little, more particular that it gets addressed.
So then, as a mortgage person, you would are you saying we'll give you the loan, but certain things have to be fixed before we can move forward?
Right. Yeah. So if there's anything noted on that appraisal that is going to inhibit, the fact that it doesn't pass the appraisal, it needs to be remedied ahead of time. And a seller, if you own that home and you have that issue, you're not going to get very many buyers if that doesn't get addressed. So you need to have it addressed.
So I have another question here. It says, I'm a small business owner and want to operate my business out of my home. Does that change the rules for a mortgage?
Not really. No. It's going to help you on your taxes, I imagine, because you can probably use a portion of your home mortgage as some type of credit or exemption or write-off of an expense. But when it comes to obtaining the mortgage or us disqualifying something or qualifying you differently, no.
So let me ask you this. You buy a duplex. I'm going to live in one side and rent the other. Does that help my getting a loan, knowing that I'm going to start collecting monthly rent to help pay my mortgage?
Sure.
Would that help somebody?
Absolutely, if it's already rented.
If it's already rented.
And it does depend on the loan program that you are under. So if it's FHA conventional, whatever, they have specific guidelines as to how much of that rent you can add back into your income. Okay. So it doesn't come off of the mortgage payment or anything. It gets added as income because that's what you'd have to report it to the government.
Okay.
So that's how they would look at that.
So if someone was building a duplex and had that plan, that money doesn't count because you're forecasting, I'm going to make this much a month. You already have to have someone in there.
Right. You want to have a lease and a tenant, and you're ready to go.
Gotcha.
Yeah.
So if someone did that, they're building new, and they already secured someone that's going to move into it as soon as it's complete. Does that count?
That's a great question, and I would say, if they were able to get something in writing, I already have a lease, I already have this, and I've already got the initial down payment ready. We'd have to look at your particular program and see what we can work with.
So there's a ways you just have to sit down and look at the situation to be for sure.
I will also say this, loan program requirements do and can change all the time. FHA tweaks their guidelines, VA tweaks their guidelines, conventional loans tweak theirs too. So I will kind of disclaimer myself of anything I might be saying today could change tomorrow, and so if we've said no in the past, maybe we would say yes today, tomorrow. So I would say if you've ever been told no, or your credit's not good enough, or we don't offer this program, it never hurts to ask. Laws change all the time. Programs get changed all the time. Don't assume what didn't work years ago won't work today.
Right. And when you're talking about the government,
things
change per elections.
Absolutely.
So, yeah.
Well, and in our state, new laws go into effect in July. Okay. July 1st is when, so things can always be updated and changed. And mortgage lending and those kind of requirements can change on a dime. They can change that anytime.
I would think that would be another reason why I'd want to talk to you, because if I don't know any of this stuff, at least whatever my situation I come into, you can look at it and say, here's a path that we need to take to get you there. So you're going to give advice to people. You just don't want to say, no, I can't help you get in my office.
Right. No, I want you to get into a home. I think home ownership is critical to building wealth, and you're going to gain equity, and this is how you get started on that path of, I guess, creating a different type of community too.
Right.
So it's so essential for our economy and for an individual's, financial picture. So I'm a big believer in home ownership. I want everyone to own a home, and I'm going to try to give you the best advice I can. You got to follow it. I can't make you do it, but I can at least point you in the right direction. And if you really get motivated and want to do it, you're going to be there.
Well, great. Well, we're actually over time.
Oh, okay.
Not a bad thing. Better to give more information out than not enough. But if anybody has further questions for you about mortgages, or they're looking for a mortgage, how can they get a hold of you?
Well, the easiest way to give me a call. So my phone number is 574-524-6185. Call me anytime, and just let me know what you're looking at, what you're wanting to do, what your goals are. And don't be afraid if you think, oh, it's too early in the process, I'm not ready yet. talk to me. I can give you some guidance. I can point you in the right direction so that, you never know, you might be able to get there quicker, or you might qualify now. You never know.
So it's free advice. If you're not sure, get that advice, and she'll help you get through it and to the end where you get to a home. All right, well, I'd like to thank everybody for tuning in, coming into the tool shop with
Thanks
me.
for having me,
Thank
Warren.
you
Appreciate it.
very much. And that does it for our show here today. Next week, we have a lawn care specialist coming in. The week following that, I have some firemen coming in from Bago Township Fire Department that are going to come in. We're going to talk about home safety. So don't forget to like us on Facebook. Be sure to check out our YouTube channel. The YouTube channel is W Seegers2. Make sure you subscribe. And once again, like us on Facebook. Thank you very much. Have a good night.